new investment in sustainable infrastructure totaled $4.3 billion in 2025. That was a record. What are the main drivers of this growth?
Well, HASI is an investor in sustainable infrastructure, working closely with clients that are the largest energy and infrastructure developers in the country, and we provide capital at the asset level, fundamentally monetizing contracted cash flows. The $4.3 billion in 2025 we're very proud of. It included a $1.2 billion investment in the SunZia wind project, which was sponsored by Pattern Energy. But even the $3.1 billion above the SunZia project was a diverse portfolio of wind, solar, storage, energy efficiency, distributed energy, including resi and community solar, fleet transportation, clean fuels, including renewable natural gas. So it's a very diverse portfolio by client, by asset class, and the platform has really scaled to the point where we can do more than $4 billion in an individual year.
Amazing. You recently announced also a $500 million expansion of your partnership with Sunrun. What kind of growth will that enable?
Well, Sunrun is a residential solar installer. They install panels and enter into lease contracts with the homeowners. We have historically, for over 10 years, worked with Sunrun to provide mezzanine debt collateralized by those lease contracts. The most recent $500 million expansion of that partnership does include that same mezzanine debt collateralized by lease payments, but it also incorporates a structure that facilitates Sunrun's utilization of tax credit transfers. And so the One Big Beautiful Bill and the IRA has facilitated the use of tax credit transfers, and our structure with Sunrun now enables Sunrun to do that more efficiently.
Okay, great. There's another partnership with KKR that you expanded, Carbon Count Holdings One, where you announced a $1 billion investment. What will that fund?
Well, our partnership with KKR, called Carbon Count Holdings One, is a co-investment partnership, and it's with KKR's Distributed Core Infrastructure Fund. And that fund co-invests with HASI. We source, manage, and underwrite all the investments, and KKR puts up 50% of the equity and pays us a fee. So the relationship has worked out exceedingly well. It's allowed KKR to deploy their funds faster, utilizing a partnership structure, and it's allowed HASI to scale our business faster and do larger investments, like the SunZia project I mentioned earlier. And it's worked out so well, it was signed up in 2024, that by the end of 2025, both KKR and HASI decided to upsize and extend the relationship. And so it's working entirely as designed, and both parties are very happy and getting out exactly what they put in.
Super interesting. So this year is very different from 2025. We've seen a lot of AI and data centers news coming along. We've seen geopolitical changes, and I just wanted to ask you if your focus areas or priorities changed this year versus what it has been so far.
So I don't think our corporate priorities have changed that much, but our business has been energized by the data center build out. And what I mean by that is it's creating more and more demand for power. Much of that power is going to be solved utilizing renewables, which are the fastest and cheapest to market. So it's created a larger pipeline for our developer clients and our sponsor clients, and that in turn creates more business for us. So much of what we're doing right now is supply side related to meet the growing demand. And the outlook for demand is quite strong over a 20-year period, as forecasted by BNEF and many others. And therefore, our business model is ideally structured for the current environment.